Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Technology tops our top stock picks for this week. Ryan McQueenie, Nina Mishra here to each favor us with a different type of technology company. Ryan, we'll start with you. You have Red Hat.
I do. For those who don't know, this is an enterprise open source software company. I think best known for its addition of the Linux system and enterprise platform for Linux there. Okay. It also has a strategic partnership with Amazon's Web Services unit and has kind of finagled its way into becoming a legitimate cloud computing offering as well. It's going to be a year of impressive growth for Red Hat. I would call this maybe not an aggressive growth company, but certainly one that would pop up on a growth investor's radar. We're looking for sales growth of about 18% this year, earnings growth of about 14%. That's based on current consensus estimates. One thing I did want to highlight on the growth side of things, though, is cash flow growth. Companies generating cash flow growth of 33% right now, so really shoring up the financials. Also a hot momentum option in tech, which has been kind of up and down so far this year. Red Hat has already gained 37% year to date. So got a little bit for a few different types of investors there. Sure, yeah. Wanted to look at two things more specifically, though. Looking here at the detailed estimates page, obviously this is a Zacks ranked #1 strong buy. We've seen solid movement with its Zacks consensus estimates for earnings, obviously up 9 cents from where it was 90 days ago. That's for the current year. And then looking forward, even more movement there with its next year EPS estimates. The other thing I wanted to look at was its earnings surprise history and its price and consensus chart as well. This is a really, really solid chart. We know this is one we look at all the time, but you know, hasn't missed in this 5-year view here. And over the last year and a half, we've seen strong response to its earnings beats with great momentum, both with the share prices and our consensus outlook for earnings. So I think, as you said, you know, we have two different types of companies here. I think this is one that a few different types of investors might have on their radar right now. Definitely one I'm looking at going forward here in 2018.
All right, just depends on what you're looking for. And if you are looking for a company that has a straight A style score across the board, then you need to take a check on Nina's company, Micron, right?
So Micron is a leading provider of semiconductor memory and storage solutions. They make both DRAM and NAND flash drives, memory chips. So this company held its investor day on May 21st, and there was a lot of good news for investors. They announced a $10 billion share repurchase program, and they also announced plans to return at least 50% of their free cash flow to shareholders starting fiscal 2019. And they raised their guidance for the current quarter significantly. And in fact, you can go to their website and the investor section of the website and look at the presentation from that day. It's a very interesting presentation. There's a lot of good stuff in it. And it basically says that it's a data-driven economy which is transforming all industries, and that is driving the secular growth and demand for memory and storage solutions. And they talked about their main drivers like self-driving cars, mobile computing, data centers, Internet of Things, client compute. All those are driving the demand for memory and storage solutions. And they also said that the artificial intelligence, AI growth story is just getting started. So if you look at their detailed estimates page, you can see that analysts have raised their estimates significantly over the past week after the investor presentation, and the share prices have also surged. But while share prices are up about 38% this year, and they have doubled over the past year, the company is still trading at a very attractive valuation of 5.4 times forward earnings. That is because the price keeps rising and analysts keep raising their earnings estimates, that is why the valuation is still very attractive. So I think the share prices still, they can go up further because the stock is still so cheap and it is very well positioned to, benefit from this rising demand for memory and storage from so many different industries.
Also active in the acquisition area, right?
Yes, they have been.
Yeah, okay.
And you also mentioned, straight A scores.
Style scores.
For all three style scores for value, growth, as well as momentum, and VGM as well.
Yeah, all of them. That's kind of rare to see in
yes,
a company.
not very usual.
Yeah. All right, do either of you own either of these?
I own Micron and my personal portfolio.
I do not.
Okay, thanks for that. Don't forget, as always, more stock information on our website, Zacks.com. And if you get over to the homepage, you can begin looking through it. With Ryan and Nina, I'm Terry Ruffalo.